Our team at Bloomberg Intelligence has compiled this list of the top 50 companies to watch in 2025. That's out of the 2,000 companies that the team follow from across the world, across different sectors. Now you're looking at some of the companies that have made the cut from the Asia Pacific region. Here to talk about one specific company, China Hongqiao Group, is Michelle Leung, our Bloomberg Intelligence head of Asia Metals, Mining and Sustainability. So yeah, tell us about why this company in particular?
Yes, so China Hongqiao is actually China's largest aluminum smelter. So in terms of output, it accounts for like 8.3% of global output. So it's huge. And then we see three catalysts coming in. First, industry-wise, we think aluminum price is likely to rise in 2025. One reason is because it's likely to turn into deficit. And of course, Hongqiao is being the largest aluminum smelter in China, so it's very well positioned to capture the growth. We're expecting its earnings to up by 60% in 2024 and then another 11% in 2025. So momentum has been really strong. And secondly is China Hongqiao, it has a very high percent of hydropower driven capacity. So what's good is it leads to a lower than peers emission per ton. So in 2025, what's happening is Chinese government is planning to include aluminum in their carbon trading system. So the more polluting companies tend to pay a higher carbon price. So as a result, given that Hongqiao has a lower than peers emissions per ton, it's likely to stand out with a lower carbon cost. So again, it's put it in an advantage. And thirdly, we expect its margin and profits to stay above peers, mainly because of its bauxite self-sufficiency. We are calculating it as to reach at least 80% in 2025, as compared to its peers like charcoal is only 68%. It's very important for its cost control, and it put it in a lower than peers cost structure as well. And also we see new income streams coming in. First is recycled aluminum business is set to ramp up. And in this side, we are seeing a strong demand coming in a few years. And secondly is investment in Guinea. There is the world's largest iron ore mine that it has invested. It is likely to contribute more income as well.
You mentioned the outlook for aluminium prices for next year, and you're positive on that. Is that sort of a direct correlation then, high aluminium prices impacts positively profits for smelters?
Yes and no. Of course, higher aluminum price is good for the profit, and which we are expecting their profits to expand in 2025. But also we have to look at the cost as well. Alumina, which is the major feedstock of aluminum process, is the key. So what's been happening is that alumina price surged by over 70% this year. And in terms of the total cost, it jumps from 38% in 2023 to over 50% in 2024. So it's a very large factors to look at. So what's the good news is we are seeing that the supply of alumina to expand in 2025, which could possibly drag the price lower. So which means lower cost for the aluminum smelters. And we also expect to see it turn into surplus. So that would literally give a higher profit to the smelters.
All right, that was Michelle Leung there, our Bloomberg Intelligence head of Asia Metals, Mining and Sustainability. And you can read the entire Bloomberg Intelligence list. Subscribers, go find that on your terminal. It's also available on Bloomberg.com.